It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, everyone. And I want to wish everyone a happy 4th of July week. And don't forget, if you want to have a wonderful 4th of July, don't forget to buy a 5th on the 3rd. That goes back to the days when they used to close the liquor stores back in the Midwest on Sundays, but and holidays, but that no longer exists. But speaking of alcohol, by the way, I know many people like to drink wine and beer and the liquors and stuff like that. And if you're trading, you should not have more than 4 or 5 ounces of wine at the most, a glass of beer on any night that you're trading, because it really does affect your trading. I worked on the floor for many years, and these guys were drinking all day long, and I mean it was really amazing, to see the influence that it has. So be sure that you don't. At least in moderation. I think moderation is the key. The first chart that I put into Tiger TV today was a daily chart of Amazon, and it's probably the most perfect technical chart you can find. I mean, there's a lot of them like that, but this is one that I happened to pick out as I'm preparing for my webinar on the 11th. And if you're interested in learning to do a chart like that, this is what I'll be doing. I'm going to show people how I construct a chart like that and build a case for, how the patterns work and things like that. I've actually had a lot of fun getting ready to do this, and I try to pick out a few new things that I have not covered before, especially a couple of astrology things that look really interesting that I think be quite nice. Okay, let's get to the markets. As you know, we have a full moon coming up on July the 4th. Actually, it's tomorrow that is the full moon, and then we have the double P index date that Steve Rhodes talked about. And by the way, David White has a special guest on at 12:30, I believe. 3:30 in the afternoon. He has one of the regulators on, and I think that'd be a great thing, to listen to. I know who the fellow is. I think Scott Patterson is his name, and that should be a great show. So try to listen to that if you get a chance. He's a very influential guest, and I think it'd be a great show. Okay, let's get to the rest of the markets. We have this lunar thing coming in. It's too early to tell. We're only a day away. The high could have been over the night on the 3rd or on the 2nd, a day ahead of time, or we could be making a bottom. It's just actually too early to tell. We got our first caller from Iowa. Are you there, Keith?
I am, Larry. How are you?
I'm just fine, sir. How are you?
I'm doing great, thanks. Hey, Larry, wanted to have you look at the DBA with me, if you would.
Absolutely. I'll put it up here in just a second. And as you know, as you probably would remember, in Iowa, you're having a little bit of hot weather right now, aren't you?
Yeah, we are.
Well, I really thought that we have. The fact is, I'm out of all my positions in the grains, and I frankly. I don't know how high they're going to go, but we are running a parabolic move now in corn, wheat, and beans, and this is usually we know how they end, but it's just a question when that first drop of rain hits. But what is your question on the DBA, my friend?
Well, I bought it at 786 around the 17th of June.
Yes, around that 26 area. Mm-hmm.
Oh yes, and it looks like it has hit the 1.618, maybe a little bit beyond that.
Yes, it's very close to the 786, and I look at this thing is really precipitated by the grains. If it weren't for the grains, crude oil, has been down other than Friday, and of course gold has been down, quite a bit, and silver's been down. So this DBA is being reflected by what's in the grain markets, and so I'm very skeptical here. I mean, they could go a whole leg higher. I know that they could go a couple dollars. In corn and beans and wheat, but frankly, the patterns have completed, and I am just very, very skeptical. I don't like to trade weather markets because you come in someday and they'll be down 50 to 70 cents, and they can really hurt you badly. And this is a business of being, trying to make money, not being right or wrong. So I'm recommending to everyone that asks me about it is, you don't want to be involved on the long side of the grains from this level.
Okay, good. I did sell half a position on Friday, and I was looking at this. Is that a 1.6 1.618 extension off of the 21st.
Yes, that last swing from May to June, if you multiply that times 1.618, that comes out to just about exactly where you are today.
Okay, all right. I thought.
And they were up again Friday, just a little bit, but not too much. And then they're up overnight, of course, because there's still really hot weather across the Midwest. But I've been involved with these for ever since I've been trading, and when I have money in my pocket on these markets, I get out.
Sure. Okay, well, thanks very much, Larry.
You bet, no problem. Regarding the weather, folks, I mean, we talked about this when back in the early part of June. In fact, it was late May when we had Rich Anderson on, and we were making that big 61% retracement in the corn at the $5 per bushel level, and we talked about weather markets and how they work and yada yada yada. You don't want to hear this. We'll do that on the commodity thing. But the thing is, it's about money management and booking some profits. And these markets, as we've seen in the past, they go straight up and straight down in parabolic moves. And so I'm recommending that you just book the profits and let the greedy and the needy take the last part of it, because it's very dangerous up in here. There's no question about it. And so you don't want to be involved with that, as near as I can tell. From the long side, just basically, looking at what we're watching right now. Now, I think the main thing that we have to focus on is this big rally that we've had in the S&P, and in the stock. In fact, all the stock markets of the world had their best June in several decades. And that was basically done in about 2 or 3 days. And, so they can go a lot higher from here. There's no question about that. And they can also stop right here, so because they're at their major, resistance levels in some of these things. However, there are points in the market that, we need to pay attention to. The utility index has, made new highs and has come back strongly. The bond market that we've been watching, very, very closely, is, getting very, very close to up to that 150.15 level, which is going to be the 61% retracement for a sell signal, and we will have to, really watch that very, very closely too, because I firmly believe that we are in a major debt crisis here. What they're trying to do across the world is, fix the problem by just, adding more bonds and more debt. And I don't believe that's the right thing to do. History says that's not the right thing to do, but, maybe history will be rewritten this time and they're not going to do it this way. But we have completed some major patterns up here in this 152.53 area in the bonds, and now we're getting ready for a retest. I don't listen to the news very much, but I did want to hear a little bit about what happened, with this Greece thing. And as I understand it, they're sort of fighting with Germany about this, and I don't know what's going to happen. All I know is I look at the charts, and that tells me that this bond market still looks like it wants to, go a whole lot lower. So. This is, my assessment of what is happening, and, you take it, for what it's worth, but I'm just looking at the patterns, and they'll lead us to the promised land, more than anything else that I found in the things that I'm watching. Now, we want to take a quick look at the U.S. dollar here, because we have had, this huge ABCD move and this butterfly pattern that occurred back at the 83 level, and then we made a beautiful ABCD move down. We rallied exactly to the 786 to the upside, and then we had that horrible day where the dollar was incredibly weak on Friday, and it stopped right at the 786 coming off of the low of the 18th of June. And so what we will be watching now is, I believe that we're going to get below the 81 level and get down to about that 80-50 level, where we'll make other AB equals CD pattern, and that's the one that you really want to be watching. Now, that should be equivalent to the euro in the area of about, I believe, they're around the 131 level, as near as I could calculate it, because I looked at the same pattern in the euro, and that's primarily where I think that we could be going if we get into that pattern. And we need to get below, a little bit below 81 and a quarter, and then we would be looking at that pattern to start to work. So, this world operates on money, and the Forex market, give us usually a tip-off of where this money is going. And we've had a tremendous move in the euro. As a matter of fact, one of the things I wanted to cover today was to show you what happened on Friday, because we always see these huge moves, these tremendous moves where the market trends strongly in one day. And one of my favorite quotes from and my favorite patterns from the Gartley book is the AB equals CD pattern. And Gartley talked about, buying the first AB equals CD market, AB equals CD pattern in bull markets. And if you'll go into Tiger TV and take a look at what happened Friday, we had that 200 pip move straight up right after the announcement, and the market went up to that 126 level, then made a beautiful AB equals CD pattern over the next 4 hours, stopping perfectly at that 125.60 level, and from there went another 130 pips higher. And the market, continued to make AB equals CD patterns through the night, and actually it followed incredibly perfectly these patterns. And this is why, when you're watching money flow and you're watching the euro versus U.S. dollar, it gives you a lot of confidence that, my goodness, why are these patterns working? And the reason is that there's so many people trading them, and we all act the same way. We operate on fear and greed, and that's where I believe these things actually occur, because the market predicted, that we would have a pretty good rally after it made the ABCD, and then it had another AB equals CD, and then we had another one that just formed just a few minutes ago at the 125.65 level, and we've rallied actually a little bit from that level. So this is what we're looking at. And remember, the AB equals CD is nothing more than a measured move. In other words, the AB pattern is equal to the CD pattern, but there are certain characteristics in that ABCD pattern that are very, very instrumental on what's going to happen in the CD leg. And those are some of the things that I've been working on to, try to pinpoint as far as what I'm going to be talking about when I do my webinar on the 11th for TFNN. So the next chart that we want to look at, we've covered the U.S. dollar. I believe the next thing we should look at is the euro, because we're looking at something that is set up for a potential that could be really just absolutely astronomical if we can get this market to rally up into this 130 level. And if we have to take a look at the weekly chart in order to see this, but this is what we're potentially looking at. We'll see the market get up to that 130 level and then head down to the that 118 level. And if you look really closely on that long-term weekly chart that I put into Tiger TV, you'll see that there's a 3-drive pattern going back to 2008 when the market hit the 122 level. Then in 2010, 119, and now it looks we're heading to 118. Okay, folks, we're going to take a break here to pay a few bills for our yachting friend, Mr. O'Brien, and we'll be back. 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks, and we have a caller from New Hampshire. Lou, are you there?
I'm here.
What can I do for you, my friend?
Okay, I'm interested in knowing short term where the NASDAQ is going.
Short term, are we talking about minutes, days, hours?
No, we're talking a few days here.
Okay,
maybe until the new moon.
Okay, well, that's not very far away. That's going to be that's going to be coming in here very, very soon, I believe. And I think it's a full moon, isn't it, that we have?
Oh, the full moon, yeah.
Yeah, we have a full moon. Yeah, you can tell. If you look outside, it's very, very bright. That's how you tell.
Right. I was thinking of the new moon coming up.
Okay, well, we've rallied back. We've had this huge rally that we had on Friday, and we haven't had anything happen today. We haven't given up very much, and the fact that the bonds are up almost 2 full points, it really doesn't mean like it's going to do very much. But frankly, I believe that we'll be making a pretty good turn. Coming in on the 3rd or 4th. Now we're closed on the 4th. The rest of the markets around the world will still be opening. So on the 5th, it's certainly not going to open anywhere near, where it closed on the 3rd. That's the only thing I can say. We've had a pretty good extension of this rally. The NASDAQ, I put it into Tiger TV for you to take a look at, but it did not take out the highs, from the 19th, which was the new moon. We were able to do that in the S&P and also in the Dow Jones, but we were not able to do that in the NASDAQ. All I can say is, Lou, long term, we're going down. It's just a question of what happens as we muddle through these days that lead up to the next huge Bradley turning date that comes into late July and early August. That's basically what I'm looking at. I think the market's going to be going, back and forth on these different news events until we finish that cycle, and then we will start down.
Okay, that answers my question.
I hope I'm right, but we'll see. And hope is a very bad trading word, by the way. Let's just make an assumption that I could be right, and then we'll take a look at it.
Do you think we're going to bounce higher before we go lower?
I think we are, yes. I have to, I spend a lot of time with the Bradley stock market cycle because I know it has to do with the energy of these cycles, and it looks like they are in a positive mode for the rest of this month. I mean, there's not that many, trading days. We have probably about 20 trading days, till we get to that point. That's about 3 weeks. And we could just chop around here for 3 weeks, or we could, go a lot higher. There's a potential, if the Dow can move up another few hundred points, that we could make a double top, easily against that May high, and that would really be a big, a big thing. But we have to, just to see what happens.
Yeah. Okay. Great, Larry.
Okay, thanks for calling in, Lou, and I hope your weather is better than it is here in Tucson in the Midwest, because we're 110 today, or that'll be our high, and that's about 10 degrees cooler than it is in Chicago, so I empathize with all those folks.
Likewise.
Okay, my friend, have a nice day and have a wonderful holiday.
You too. Bye-bye.
Okay, thank you for calling in. Okay, folks, we have to. We've got another break coming up, the short one, and we want to. When we get back from the break, we need to talk about the crude oil market, and because we had that tremendous move. The market moved almost 9% in a day and a half. Based on the the hourly charts, and we need to discuss that a little bit more in detail, because that's a large part, of the economy and the rest of the markets. But here again, this market did not follow through. We rallied up to the 786 off of the June highs, is all we did, and then the market has since backed off. It stopped exactly at the 786 of those June highs, at the 85, 20 level, and we've backed off, $3 a barrel, since that point. So we're at a critical level. I don't think there's any question about that. And if we go below that low of $77 a barrel in crude oil, you can, I would really be tempted to make a prediction that we will hit the high 50s before very much longer. I know the mid-60s are the first target based on the long-term weekly charts, but if that breaks, you could really go down. Remember, in 2008, folks, the market went from 143 to $33 a share per barrel. So these markets move very, very actively when they move. And remember that we're dealing with a lot of different buying and selling consortiums and hedge funds, and many of them don't have any skin in the game. They're basically playing with other people's money, so they don't care, but they have to answer margin calls. 877-927-6648.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his Market Take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of tfnn.com.
Okay, we're back, folks. So we were talking about crude oil, and one of the things that we were watching, of course, was that butterfly bottom that we had occur in the crude oil, and then we had it also occur in the gasoline futures, and gasoline futures had been leading the crude oil market because it bottomed, much earlier. Now, what's interesting, if you get a chance to go into Tiger TV, what I've done is put in an hourly chart of the gasoline futures, and you'll see that it made this huge AB equals CD pattern on the high on Friday, and then of course the gap down today, and it was an indication that if Sunday night, if you've been looking at that when the crude oil got to that 786 level off the June highs at 85, it was not being helped by gasoline, and so that was a good place where you had a potential for a low risk short. So that's basically all I'm trying to do is to look at the two major parts of this. Heating oil did pretty much the same thing. So when you look at a complex like that, you're looking at very similar things that you're watching when you're watching beans, oil, and meal. Now this market, just to get off the tangent for a little bit, because I only have one other show this week on the this big move that we've had in the grains, especially in soybeans and meal. I mean, soybean oil is down today, folks, and it's had a terrible. We talked about this on last week's commodity show, and it's also down with the rest of the market. So, and that is about 20% of the bean pod itself. So, I don't want you folks to be long. Grain, beans, wheat, corn, rice, anything in here. Even though they're higher today, these things could turn on a dime, and you don't want to give anything up. So that's all I'm trying to accomplish when I talk to you about these things, is to keep an eye, on that particular thing so that you're able to do it. Now we need to get back to, the rest of the markets, and I know one of the things that everybody watches, especially those at TFNN, because Tom was one of the original gold bulls. Back in I think he was the original gold bull back in 2003 when gold was down at that $300 dollar per barrel level. $300 per barrel. Get a life, Larry. At $300 per ounce level. I think it hit 260 or 270 was the low. But now we've actually been at a point now where we've tested this 1522 level now over the last 9 months, and it's held the level very well during September, December, and here again in May and June, and now we've tested it again just last Friday at that 50.48 level per ounce. And then what we had happen overnight is the market got up to the 61% retracement of the June 19th high, which was the new moon. And all we need now for gold to get moving is to get it above about 1620, and I believe we're going to have an explosive move to the upside if we can do that. My feeling behind this is the fact that it's held the level so strongly and so powerfully when it could have broken, because the fact that copper was breaking and silver was breaking, gold actually held up, and it did it in a Gartley pattern. If you'll go in to look at the TFNN, Tiger TV, you'll see that there's a beautiful Gartley pattern that formed down there at that 1550 level, and then we will, if it can, as long as it holds that level, 1550, and I know $50 in gold is not very much, but if we get it above 1620, I think gold could be off to the races. But that's that hasn't done that yet, so that's where we'll have to be able to look to see, the actual spot of when the breakout occurs. Copper has actually had a little bit of a rally also, and that's another thing that tells us that maybe this little rally that we're having in the stock market is also going to make some difference of where if we're going to hold this level and go through the into late July and to make this level. Now, we want to talk about silver, even though it's the stepsister of the precious metals. It's tested that level of $26 per ounce now for the fifth. Actually, it's the fourth time that it's tested, and so as long as silver can hold above that 26 level, it also has a chance, to have the rally. So this is what we're focusing on with these, and we'll see. I don't trade silver hardly ever at all. When it's in parabolic moves like we had back in April, I'm always in there looking at something there, because we had the open interest dropping, and we have very little help here on the open interest and volume side on the both the gold and silver, and also the bonds. I mean, there's just people are not they're not. We don't have a lot of players coming in, and we really need that in order for the market to to work higher. So this is something that we have to at least watch with a great deal of of importance. That's all I can say. It's nothing else that that I can really say to do this. Now, someone asked me a question, and it also goes back to the question that we got from Lou in New Hampshire, and that is what's going to happen, when we have this, this full moon that's coming up. We made a, major high on the full moon in May. We did, very little with the full moon in June, except that we made a major bottom, and here we're coming in to the full moon on the 3rd of July, and we are setting right now, and this is actually a beautiful chart to look at. It's, if you go into Tiger TV, you'll see that we are setting almost exactly at the 61% retracement of the move from April down into June, and we're coming into this high. Today's the 2nd, and I'm assuming that this is what we're making, is that we'll be making a high. I don't want to make too much of an assumption, but we're up 5 or 6 days in a row, and this is what I'm looking at. We also have a P-index dates are right here too, so my assumption is we're probably going to be topping here in the next 2 or 3 days, and then we'll see that. See if it continues to move to the downside. But the cycle has been working very well. But remember, during that period, into March or into early April, the cycle shifted and it didn't work nearly as well as it's working now. And that's just the way cycles work, folks. They disappear and then they come back. The answer for that no one has ever found. Whether they will or not, I'm not sure, but the lunar cycle is a shorter-term cycle. It works very, very nicely for short-term trading. I'm trading it's 3 to 5 to 7 days, and that's the the real money, in my opinion, is the swing trading part of this, because the buy and hold strategy, as Steve Rhodes has talked about many times, just flat out does not work. If you bought stocks 10 years ago, the overall market, you have not made very much money. And when you figure in the taxes and all the other stuff, it's probably been a negative thing. Now, this has been one of the few periods in our history where that has happened, but and it usually precedes something pretty nasty. But we'll have to wait and see. My overall, someone sent a message to me through the Tiger Den about my overall view of the market. Is it still bearish? And yes, it is still bearish. And the main reason for that is that we broke the low from August 17th of 2007. That's when the Dow was around 13,500, I believe, somewhere in that level. And once we broke that told me that the cycle of debt that we've been looking at all this time has continued to move upward. And it's just a question of when these things finally, roll over. Okay, we've got a call from John in Philadelphia. Are you there, John?
Hey, Larry. Good morning to you.
Good morning to you. How are you today?
Steaming. It's I'm on vacation in Wisconsin as we speak, and it's burning up out here as well.
Yes, I hear from everyone across the Midwest it's quite bad. What can I do for you today, my friend?
Larry, I'd like to ask you about bonds, and specifically would like to ask you to share your thoughts with me and your listeners on Jim Flanagan, a person, in fact, I heard you mention last week, who, of course, is a California man who is a extensive analyst, I think, as I heard you say.
Yes.
Just to set the stage, Jim Flanagan is using what he calls a 60-year cycle, and he's using that to forecast stocks, bonds, and commodities. And by his way of thinking, that 60-year cycle is operative here, whereby he says the following: bonds made a top on June 4th, and he's expecting a massive decline over the next couple of years, in keeping with the pattern that you see. He also happens to say, however, on stocks, that 60-year cycle looks to him to be pushing stocks up higher for another 2 years, and the CRB is bottoming now before another big advance. So that's just the background. Can you share your knowledge and thoughts as to the reliability that, as you see it, of his work over the years?
Yes, I've known Jim Flanagan for many years. He was a college student when I was at Drexel and in Beverly Hills. He was, I believe, at one of the Claremont colleges. I'm not sure, but he had started studying with the people at the Investment Center bookstore, where Don Mack, had this huge bookstore where I found the Gartley book, and I didn't find it, but Don gave me the Gartley book, and there were some people there that studied with Dr. Jerry Baumering. Actually, Jim Twentyman worked with with him for a while. These guys were GAN people, and that's what Flanagan is. Jim Flanagan is probably the best GAN person that I know, and the one thing that GAN really talked about in all of his books was the 60-year cycle. That's part of that Kondratiev type cycle that you hear about occasionally. But frankly, John, that 60-year. When you start talking past 60 minutes, you're losing this old cowboy. I'm interested in making a buck. I'm not interested in being right or wrong. So 60 years is way past. I'm not going to see the next 60-year cycle. I can tell you that. I saw one, but I don't think I'll see the second one.
All right. Thanks so much for the thoughts,
Hey,
Larry.
thanks for calling in, my friend.
Bye.
Okay, we have another call from Massachusetts. Are you there, Mark?
I am, Larry. Happy 4th to you.
Thank you, sir. What can I do for you?
Well, my question was about the euro dollar. You were talking about the euro going back to 130.
Yes.
Does that confirm, or indirectly maybe confirm, that the market will be heading higher?
Well, if the correlation has been the same like it has been, it certainly could do that. Now we're at a critical level here, and the euro is under a great deal of pressure, and I don't think that there's any question, down the road that the euro is going to, go down into the 118, 115 level longer term. But it still has the potential, if we can get above that 127 level. The move from 127 to 130 should be very quick, and if it's going to occur, it should occur in the next 3 weeks.
Okay, and that would probably dictate a higher stock market, at least for the short term.
Yes, at least for the short term. Now, you have to realize that, the high that we made on Friday was nothing more than a 786 retracement of the move that we had from the new moon on the 2nd of, the 19th of June, and all we did was make a 786 retracement up there at that 126.75 level. Now, we've only come off, about 80 pips, but that still has been a very important level so far. So if we can get above 127, then we've got a chance for the euro to to make that 130 level. So
well, now
that's
I have
what we're looking at.
Another question going back to the stock market. Is it conceivably possible that the high came in prematurely, and that the high was actually Friday, that we might just drift here for 3 weeks?
There's a possibility of that. Actually, Sunday night, we made a little bit higher high, so that's even closer. That's on July the 2nd. So it could just be a day off if that's the case. But we'll have more information when we come back into work on Thursday, because we have a very shortened session tomorrow. It's one of the shorter sessions of the year because people like to get out to spend an extra day. And so I will be following the markets, of course, because 24/7. I'm always there looking at something. But the rest of the world, will be trading and looking at things. I always make a joke about the people in the UK. Why don't you guys celebrate the 4th of July? But they don't seem to get that very well. If they do, they get angry. So I stop using that joke.
Yeah, gee, I wonder why. I wonder why. One of the things that Steve was saying last week in his shows was to be long by the close on Tuesday, and he said you could buy at 11:50 or 12:59. He said, but he kind of indicated be long going into the 4th of July. But you kind of sense that you're saying maybe wait until Thursday to see what happens.
Yes, I don't like to be long into a holiday or a holiday weekend, especially when the rest of the world is trading. Now, we do have trading because of the 24-hour markets, but they're relatively thin, and the real money, the hedge fund people, the mutual fund people, they're not going to be able to do anything, until they come in on Thursday morning. So it's going to be quite interesting, what happens at that point.
So you maybe just go to cash.
Well, I just stay flat. I have some positions that I'm looking at. We trade in and out of these positions that we have in bonds and stocks when they hit, key levels, because we know they're going to rally. But listen, thanks for calling in.
You have a great fourth, Larry.
All right, you bet. Have a happy holiday. 877-927-6648.
you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Back, folks, and I would like to end the program by talking a little bit about the Bradley model, and I also want to post a chart about the British pound. Is the fact that we've got a chance for the British pound to get up to that 159 level. That would be a secondary Gartley pattern, sell pattern, and that would be a good place to look at to go short. That would be equivalent to the 130 level in the euro. Now, a little question to come to my attention about the Bradley model. Someone said, "How in the world can you make any assumption about the astrology in the stock market?" All these are numbers, folks. The Bradley model is based on positive or negative aspects of the market. In other words, they've been assigned a certain aspect based on some scientific data that came from Princeton University. And basically all I did was look at 136 years of data, which accompanies 1,632 months of data. And there's a lot of samples in here that I've looked at, and I know that it has a probability of better than 3 out of 4 times being correct, and that's why I'm looking at it the way that I'm looking at it. And I use that as my model. What I think is going to happen. It beats any economist that I've ever seen. I mean, it really has. I mean, there's so many examples of it. A couple of these examples of the real major ones I'm going to be covering in the webinar on the 11th. The ones from 1974 and 1982, 1987, 1996, and show you how these and 1980 and 2007 and again in 2009, and just to show you how these things actually work. And they're just numbers. That's all they are. A professor in mathematics named Burr, B-U-R-R, in Princeton University, worked on some of these things, back in the early 20s. And he knew that certain planetary things were either positive or negative, going back, looking at work that the Babylonians had done, in 3,500 to 5,000 BC, things that they had written, even about, the production of wheat, based on the planet Mercury and the planet Venus. And this was work that was also done by George Baer, back in the 30s. And so all I did was just look at some of that work to see if it has any, application, and it certainly does. It's so far from being perfect that it's ridiculous, but it's so far better than what else is out there as far as timing that, you really need to take a look at it, because more and more people are beginning to look at this, and that's, what we're really looking at very closely. I had one other question about Arch Crawford. He sent a special memo out expecting to have the market to have one of the worst days ever on Friday, and it was the exact opposite. The day was right, but he was expecting it to be down, and the market actually went up. And that is an inversion, and it does happen. But the fact that it was such a big day is another attribute to some of these things, why they occur. We don't know the actual thing, but the probabilities are such that they put the odds in your favor just by looking at something simple like the 14-day and 28-day cycle, in the lunar cycle, between full moons and new moons. And that's what we're trying to do. And we have this one that we have coming up here is a pretty big one, because it's accompanied with the P-index dates, and the P-index dates act like little magnets of whether the market goes up or down into those spots. So my suggestion is don't have a position coming into Friday into Thursday, which would be the 5th. But if you're trading, you watch the 4th and see how it is. If you watch the overnight markets, you might get a little bit of a lead on people coming in to Thursday. But frankly, the risk is too great to do it, because unless you have access to the overnight markets, you can't really protect yourself. And it's not a business of being right or wrong here. The business is making money and protecting yourself. So everybody have a wonderful 4th of July. Remember, we live in a wonderful country, folks. It's got a lot of things wrong with it, but everybody else has too. So all we have to do is look in the mirror and see the man in the mirror.